So if you global market, if you see that kind of Indian market continuously underperforming globally, many of the markets, the US, Japan, Taiwan, Korea, many European markets, all have done exceedingly well in the last 1 year. Many has gone up even 2 times, 3 times like that. Whereas Indian market continue to underperform. For the last 2 years, Nifty has given zero returns. So there are some valid reasons. The main reason for the underperformance is the FII selling. So foreign institutions, why they are selling? There are many reasons for that. One reason is that they are finding better alternatives, and second thing is currency is depreciating. So because of that, Indian market continue to underperform. But we expect that the underperformance we have done happen in the last 1 year, 2 year is nearing the end. Most probably, we may also start moving with the global markets. And the main reason why foreign institutions were selling was that our currency was the worst performing currency among major economies. We have depreciated a lot. Against the dollar from 85, it went to 95, 96 level. From euro, it has depreciated much more in the last 1.5 years. But RBI and government has taken steps now. RBI has taken short-term step to stop the slide of the rupee. The second thing is that government has taken long-term step by giving exempting capital gain tax and interest income tax. They have exempted. That is in long term. And because of this, we expect that the worst is over for the rupee, at least for the near term. We are expecting around 50 billion of inflow to come because of the steps taken by RBI by September 30. That is another few months. And most probably the depreciation which was happened for the last more than 1 year, that may come to an end. So once rupee stops depreciating, means what will happen is that foreign institutions who were expecting that rupee will depreciate further and they were selling, because whenever rupee depreciates, they are also losing money. So that they may stop it. If you see the foreign selling figure for the last 3 days, previously they were selling 5,000 on an average on a daily basis. On expiry day and all, they may sell more like 7,000, 8,000 levels, 8,000 crores. But for the last 3 days, no, their selling has come down. Yesterday they sold 1,000 crores. Previous 2 days they were selling just 2,000 crores only. So once rupee starts appreciating, means naturally it will add to their returns also, and foreign selling will come down. That's what our expectation is. And AI stocks, if you see, we have seen some signs of profit booking happening globally in AI stocks. All stocks which went up perpendicularly, some profit booking has happened in AI stocks. The other major thing which happened was, which was surprising to many retail investors, particularly, is that gold and silver price fell very sharply in the last 10 days. Yesterday only it has recovered a little bit. So silver, we all know that is a highly speculative, a lot of speculative movement happens into silver historically, if you see that. And from the peak price of $120, it fell to $62 a day before yesterday. Almost near to 48% correction it has happened. So the worrying thing is that just 6 months back in January, no, all the ETF funds received the highest ever inflow, more than the equity fund. In a single gold and silver funds, they have seen more than 30,000 crores inflow when the price was at the peak. So historically, it used to happen that when the price was at peak, means huge retail inflow will come. The same thing happened in silver ETF also, gold and silver ETF also 6 months back. And Nifty and Sensex, if you see in the last 1 month, around 2% correction, mid and small also near to 2%. So in the last 1 month, almost 2% correction was there. So the most worrying part was that the irritating part was that global markets will be going up, but we were moving sideways. And after 2:30, suddenly again market will fall. So that was a big irritant, because FIs were continuously selling. All the FII owned stocks, big stocks like HDFC Bank, ICICI Bank, Reliance Industries, then IT stocks, all were falling continuously. So we expect that, suppose if situations turn around, means maybe some short covering may also happen, because still they are holding 90% short in the index derivatives. So some short covering may happen. For the last few days, at least the two big index banks, HDFC Bank and ICICI Bank, showing some signs of buying coming. Some recovery has happened. Even Axis Bank also showing good strength. So some index stocks in private banking is showing good strength. showing that the FII selling has reduced. That's what it indicates. And US Iran war, actually in India, what we used to say is that because of US Iran war, only our markets were falling. That's what the main talk point is. But globally, if you see that almost all markets has gone up in spite of this war. But the problem is that we import crude oil a lot, and crude oil prices went up till $118, and now because of this US Iran war and the closure of Strait of Hormuz, now the price has come down to $87. So it is basically a positive for our market. And Trump has told that yesterday he told that Iran US Iran deal may happen in couple of days. Many times in the past he told it, but it did not happen. But this time what we are expecting is that it will happen, because the first thing which it will be indicated is the in the price of crude oil prices, because the crude oil prices is an highly a, a highly analyzed market. See, there are so many hundreds of analysts, crude oil analysts are there, who track each and every ship coming out of a country, who is buying it, who is selling it. They track it every second. So crude oil prices will first indicate what is going to happen. And we have seen that the crude oil prices, in spite of all attacks between Iran, Israel last week, and US, Iran firing each other, the crude oil prices did not went up in the last 1 week. So that indicates that something is going to happen, some positive is going to come. And then yesterday crude oil price came to $87. Just 2 weeks back it was $115. Now from there it has come to $87, which indicates that some positive news is going to come. And if crude oil prices fell below $80 means definitely our market will do very well. And also the crude oil prices are the another what it indicates is that some transportation is happening in Strait of Hormuz. If Strait of Hormuz is completely closed means definitely crude oil prices won't stay below 100. It would have been 110 or $115. But no country is saying that our ships are crossing Strait of Hormuz, but silently it is getting crossed. That is why the crude oil prices are down below $100. If Strait of Hormuz is completely closed means definitely crude oil prices will be around 115 $20. It would have been at one point. It came few months back during the mid of the war. At that time it was completely closed. So the crude oil prices indicating that the transportation is happening even before the US Iran deal. Once the US Iran deal happens means most probably more ships will go through that, and crude oil prices will fall below $80. AI stocks, if you see that the profit booking first signs we are seeing it, and many stocks has gone up in a parabolic manner. So the profit booking is not a surprise, because a stock with $50 goes up to $400, $500 within 1 year, and it falls from 500 to 350 means even 6 months back somebody bought means he will be sitting in a huge profit. Only those who bought at the exact peak only they will be on an loss, whereas the others will be still sitting on a huge profit. Yesterday the SpaceX IPO that got listed, so it was given more than 1.75 trillion valuations on listing. So AI stocks are still hot, but we don't know where is the peak. But one thing is sure, in spite of this stock price movement, the investment in AI will continue for the next many years, because all these big companies, Amazon, Google, Microsoft, everyone is going to invest billions, hundreds and billions of dollars in the AI. Stock price movement will depend upon the market perception and market sentiment. But in spite of that, the stock going up or down, the investment will continue for the next 5 years, 10 years in AI. Because the profits they are making, all these companies, big companies, they are going to invest in it, because they need some future theme for their long-term business. So now they have found that AI is the revenue stream for the next 10 years, 15 years. So they will definitely keep on investing in that. So the companies belonging to power sector and AI related data center, they will continue, their business continue to grow, but stock price may change. For example, a company called Power India is there. It is trading around 150 PE, I think. So the stock price may fall, but Power India revenue and profitability will go up for the next 5 years in a big manner. The PE ratio may fall because I may say that 150 is a high PE. I am not willing to buy. Salim sir may tell that it is trading at 30 PE. It is too high. I will not buy. May tell. So it's a depend upon individual perception. But someone may say that 100 PE is cheap for me because the company is growing at 100% per year. So I am ready to give 100 PE. So that will depend upon market forces, and stock price will go up and down, but AI investment will continue. But unfortunately in our market, the problem is that pure AI stocks, nothing is there in our market, big AI stocks. Only the AI power related and AI infra supplies are only listed. So these are the stocks which are going up on sympathy, it is going up. So this is the main thing which has happened in the last in the last RBI meeting. So rupee was continuously depreciating. So in coming slides, I will tell why our rupee is very weak. What is the reason for that? So RBI and government has taken some steps to stem the depreciation of our currency. So RBI has taken short-term step, and government has taken long-term step. So what is that RBI has taken is that, so the hedging cost for banks for raising foreign currency deposit from NRIs, that will be bear by RBI. See, generally, if you see the foreign Indian banks, no, for NRI deposits, they give around 3 to 4% maximum interest rate they will give. Because it is in dollar deposit, the hedging cost has to be borne by the banks. So the hedging cost is generally, Indian rupee has depreciated historically between 3 to 4% annually, if you see on the long term basis. So if you give 3% deposit for NRIs, means another 3% will come as an hedging cost for banks. So overall between 6 to 7% cost it will come for the banks, which is in line with our domestic depositors. So now what RBI has told, the hedging cost RBI will bear. So you have to give only the interest only to the NRI clients, they told. So that means what? Now banks can afford to give higher interest to the NRI clients for the dollar deposit. So now what happened, previously they used to give around 3.5% interest to NRI dollar deposits. Now they are increasing to 6.5. Even some banks are offering 7% interest for the dollar deposits they are giving from the NRIs. That means the NRIs will get a decent interest rate from Indian banks. If they deposit, there is no risk of any currency is there. All it will be borne by the RBI. So because of this news, what we are expecting is that around 50 billion it will come to Indian banks as dollar deposits from the NRIs. That means 50 billion, if it comes, means 50 billion of dollars it's going to come, means it will be positive, because when FII sells, means they take out the dollar, so it will neutralize whatever they are taking out. So immediate inflow, already the inflow has started on a daily basis. It just started few days back. On daily basis 2 billion, 3 billion it is coming, and it will be applicable till September 30 only. September 30. That is another. Now it is June. No, another few months are there. Till September 30 only it is applicable, and during that period it is expected to get around 50 billion inflow. The second thing RBI what they have told is that many PSUs are there, like Power Grid, ONGC, NTPC, and all there. If they borrow money in foreign currency, external commercial borrowing, then the hedging cost of it will be subsidized by the RBI. So that's also positive. See, when we borrow in foreign currency, for example, US dollar, if you have borrowed around at 80, means if you have borrowed 1 billion at 80, means now it is 96. So that currency risk is there for those who are borrowing abroad. The interest rate will be lower, but whereas the currency risk is a big one for them. Now RBI what they have told, that they are going to subsidize the hedging cost for PSUs and banks for raising foreign debt. So that is also a positive, and it is also applicable till September 30. It is applicable, and there are another few months. So because of this both move, around 30 billion, 50 billion is expected. 50 billion worth of dollar is expected. That's why rupee now started showing some signs of stability. Most probably, once the FII selling stops, means most probably it may start appreciating. The this is for short term only till September 2030 only it is applicable. Whereas for government, what they did is that the interest on capital gain on government securities are exempted from tax for foreign portfolio investors. See, foreign portfolio investors, they invest both in equities as well as in debt. Yeah. And equities, we all know that we have long term capital gain and short term capital gain. So similarly for debt also they have to pay a long term capital gain, they have to pay 12.5%. For the interest they are getting from that government securities, that is subjected to 20% TDA. There is withholding tax currently. Withholding tax is nothing but the TDS. In globally, they tell it as withholding tax, whereas in our country we tell it as TDS, tax deduction as source. So somebody getting a 1 crore as an interest income means 20% government will deduct in that, and they will give only 80 lakhs. They will give to the FIS. Now, what government has did that both capital gain and interest income they have made tax exempted for foreign portfolio investors. So it will be little attractive for them because a currency depreciating 5% and a government of India giving 7% means a foreign institution will get just 2%. Apart from that, they have to pay the tax also. So some little burden has been removed, and it will be not immediate positive. It will be long term positive on debt inflows on government securities. So top two are short term, for short term purpose they have done it. This is for long term they have did it. But still many are asking for exemption in equity capital gains, but it looks that unlikely they will bring it in near term. The other major important thing what government has did is that the foreign individuals were allowed to buy Indian equities. That is also a very long term positive for our market. See, currently, if you see that only NRIs are allowed to invest in Indian equities, then foreign institutional investors are allowed to invest in Indian equities apart from domestic investors. So somebody, a nationality of Japan or a Korean retail investor is there. He, if he wants to buy an Indian stock, means he cannot buy as of now. Now, what government has done is that the foreign individual person, if they are willing to buy an Indian stock, means they can buy in India through a portfolio investment scheme. Just like how NRIs and how, corporate in OCIs are investing. Uh, NRI, suppose if NRI wants to invest in India, means they have to invest through PAS. So a foreign individual person, if they want to invest in India, means like an through PAS scheme, just how NRIs are investing, they can invest. Say an Indian investor can buy a share in NASDAQ. Some limit is there. Then RBI fix that limit every year. If we want to buy a foreign stock, means we can buy it. Whereas a US citizen cannot buy an Indian stock because Indian rules don't allow foreign individuals to buy an Indian stock. Only foreign institutions, pension funds, sovereign funds, they are allowed, whereas individuals were not allowed. Now, foreign individuals also are allowed. So it's a big step. It's a long-term positive for their market. So many big companies globally do of global scale is listed in India means they can invest that stock through PAS scheme. They can invest a foreign individual. They can buy. Yes. No, no, for government. Government did that. So it's a big step because now foreigners, any nationality, an Arabian can invest in India, an Iranian can invest, a Sri Lankan can invest, anybody can invest in the Indian stock market. It's a big step. It's a long-term positive. Foreign individuals of any citizen, they can invest. So it's a big positive. And rupee, if you see that in the last 1 year from around 86, it went to more than 96.5 or 7. It went from there. It has now corrected to 95.4. We expect that the rupee has achieved a near-term top has been made. That's what we are expecting. From here on, either we may see sideways movement or on a some little appreciation may happen on a rupee depending upon the foreign institution uh, activity. If they start buying or stop selling, means most probably rupee will appreciate because we are going to get additional 50 billion inflows because of the RBI steps they have taken through NRI deposits. Suppose if they continue to sell like what they have did in the last 3 4 months means rupee will stay here only. We are not expecting major depreciation from here on. So why our currency is depreciating? That's the big question. Many times I have explained into it because of the balance of payment issue. It is happening in 2012, 13 also our currency depreciated a lot. At that time also RBI gave this like just now how they gave the hedging cost bond by RBI. No, the same thing. It was at that time also they gave 13 years back because rupee was depreciating a lot, and they want a NRI to put in more money in our country through deposits. So at that time also RBI gave the same relaxation like how it was done now. And why rupee has been depreciating a lot, and many times I have explained in this meeting. So if you see that it all depends upon the money going out of the country and money coming in into the country. So the difference makes the rupee either appreciate or depreciate. If too much money is going out of the country means rupee will depreciate, and too much of money coming into the country, net money going out minus money coming in, net money is positive means rupee will appreciate. So that is called balance of payment. Every quarter RBI will announce what is our balance of payment, how much money came in, how much money gone out, which are the money came in, which are the money gone out. Every quarter they announce it, RBI. And this is what the balance of payment is. We have current account and capital account. Two things are there under balance of payment. In current account, we have this trade, exports and imports. That is what most of them will focus on. Goods we are buying, crude oil prices, mobile phones, gold, all this will come under exports and imports. We export lot of goods also, textile goods, and many other goods also. We auto is one of the major exporting from India. Two wheelers, Maruti now is selling exporting around 45,000 cars per month. Just 1 year back, they were exporting just 22,000 cars. They have doubled their exports. Hyundai is exporting a lot of cars. Bajaj Auto, TVS Motor, all are exporting. All are exporting lot of two wheelers. So all this will come under this mercantile exports and imports of goods. Gold will come. This is always run into deficit for our country. Historically, we always have deficit in merchandise because we import lot of gold. Every month we import billions and billions of dollars of gold, and we import a lot of mobile phones like that. And because of this, huge always we run in a deficit. We import lot of crude oil, and the second thing is the invisible in current account. Invisible is nothing but the services. The IT exports and all will come under this services. Then now this GCC, a lot of GCC is happening. Exports are happening. All this will come under these services. It is we since 1992 we run into surplus in this because India exports a lot of IT services. So this is always the positive. The second is the factor income and transfers. Many NRIs are there in foreign countries. Many people are working in US, Europe, and all. They send money, and these and all will come into transfers. It will come remittances. That also net positive for us. Then factor income is there, the profit, interest, dividend and all there. Suppose Microsoft is having a company here, they will give declared dividend means they will take money from here to their parent US. They will take that will come under factor income. Hindustan Lever is a multinational company. Every yearly twice they will give dividend. So when parent Unilever will get the dividend means they will take money to their homeland. So these and all will come here. So the services is positive, transfer is positive. This is almost neutral. It will have some Indian companies are there abroad. They will give dividend. That money will come into India. This is neutral. So if you both add mercantile and invisible, overall we have current account deficit. We have little bit trade deficit will be huge, whereas the current account deficit will be much lesser because of the services income we have and the transfers we are getting from our NRIs. But still current account deficit will be negative for our country. But it is balanced with an capital account. Historically, if you see that our capital account is always positive. Under capital account, what it will come? Foreign institutional flow and foreign FD, foreign direct investment. These two is always positive for many years for our country, and whatever deficit we are happening in there, it is neutralized by this foreign investment. Then we take loan from a World Bank and others from abroad. That also an inflow into our country. And then the banking deposit, which is now announced, this is NRI deposit, FCNR deposit. These three will always will be positive for us. So whatever deficit we are having in this, it is balanced by this capital account. RBI dividend is an internal, sir. Money is not going out of the country. It won't come into either current account or capital. It's an internal. Uh, so whatever deficit we are having in current account, it is balanced by capital account. Capital account most of the time will be surplus. But what was happening for the last 2-3 years is that this is the chart. You see, say current account balance. If you see that is always negative, -1.2. This time we should not see FY21 because of COVID. It has come to positive because we did not import much crude and gold at that time. So we should not see FY21. FY22 onwards, you see historically we run deficit only. Current account balance -1.2% of GDP, -2% of GDP. Like that, we always negative. Current account balance is always negative. This is the INR change. For the last 5 years, continuously rupee is depreciating every year. FY22, 3.7, FY23, 8.4, FY24, -1.5, FY25, 2.5, FY26, almost 11% depreciated. So the current account, if you see, always it is deficit. So gross FDI, it is positive. See, FDI, we get it. So the problem where started was that the repatriation. It is the issue which has happened in the last 3-4 years. Repatriation means who is repatriating. For example, a company called Paytm. It was started in India many years back. Money came into our country. So when money comes into many foreign companies, many Chinese companies, and many big PE players invested when it was started. So when during starting, when they give money, means it will come into gross FDI because money is coming into our country, and it was shown in this gross FDI. It will come. What happened was that Paytm got listed. Then those who invested 10 years back, what they did, they booked money, they sold the shares in the stock market, they took it out. Similarly, Eternal, one company was there. Many foreign direct investment initially came, but once it got listed, means what happened? They sold the shares in the initial public offering. They sold the shares after listing. They took back the money. What happened? The repatriation. So money, whatever came many years back, started going out. Particularly after the new generation companies started listing. So the repatriation started increasing in the last 3 years. It was 0.9, then it went to 1.3% of GDP, 1.4, 1.6. So it was big negative because my money, whatever FDI came, it started going out. The other thing is net ODI. Indian companies also invest abroad they make acquisition globally. That is what called net ODI. That also started increasing. Many companies started doing acquisition abroad. Net FDI, you see, almost flat. If you adjust all these things, net FDI, if you see, almost flat. Previously, 3-4 years back, it was 1.2% of GDP. But last 2 years, net FDI is almost zero. Though gross FDI is positive because of repatriation and Indian companies investing abroad, the net FDI has become zero. So one of the big positive which India were having in the last many years in capital account, that has become zero. Uh, Further, the problem started when the foreign institutions started selling it. For the last 2 years, they sold heavily, 0.4% of GDP and 0.5. It also became negative. So the overall, the capital account, the deficit which we are having in current account, unable to be balanced by the capital account flows because capital account itself has started turning negative. So that is the reason for the depreciation of the rupee. So the only thing what government can do is that they have to improve the foreign direct investment. One, that is the main thing. Second is the thing is that the flows foreign institutions selling, that has to be stopped. That is the only thing government has to take steps to attract for foreign flows from FDI and to money going out of foreign institutions, they have to stop it. So that is what government has to take. Then only rupee depreciation will stop. Uh. The second thing why FIs are selling, if you see that the earnings growth has been lackluster when compared to the companies which are available globally. Because in US we are seeing around 20% earnings growth, whereas if you see Nifty companies, last year FY26 the growth was around 6% only. If you factor for extraordinary items. But if you don't look into extraordinary item, just add all the profits shown by the company means overall profit has gone up by 12%. But a company called a Tata Motors, no, they made a demerger, and a Tata Motor has shown a profit of almost 80,000 crores because of this demerger effect. Because of some accounting policy entries, they made 80,000 crores profit. And if you take that means 12,000 crore, 12% profit growth is there. But you should see only the extraordinary item adjustment, you have to see it. That means only 6% growth is there for Nifty companies. Whereas the companies in the Taiwan and if you see in South Korea, only few handful of companies, you can count the number of companies by fingers. Only 2 companies, 3 companies like that. Their profits are growing by 4 times, 5 times, 6 times like that. It is going up. Their profits are. So foreign institutions they invest there only. See, stock price has come down, sir. We have to see how much profitability is there. Stock price is not the indicator of profit. We have to see how much stock price. No, it can trade at 30, 200 PE. From 200 PE, it can come to 100 PE. Profitability we have to see. Nifty EPS is around 1158 now, which means that now index is around 2300 level, which means Nifty is trading around 20 PE. See, one of the lowest in the recent times. So the forward PE is around, suppose if current year, if Nifty EPS goes up by another 10% growth, if it comes, means around 17, 18 we are available, the forward, current FY27 EPS, which is one of the lowest. So valuation wise, if you see that it is very attractive. Only thing you need some sentiments to improve. As of now, the rupee depreciation, I feel it has come. It will stop. The two things are there. One, RBI has taken steps. The second thing is that crude oil prices has fell below $90. So that is because of this, the pressure on rupee will come down, which means that the FII selling also may stop if the currency starts depreciating, and if currency starts appreciating means they will wait for selling. But the big plus point is that the broader market continued to outperform in earnings when compared to Nifty 50. When you see the broader market, the growth is around Nifty 500. If you see that the growth is around 16%, so far higher than the Nifty stocks, and that is why the Nifty stocks are not doing well. Whereas in broader market, if you see, so many stocks are going up. If you see our conviction idea, we gave Wheels India at a 900 rupees. Just a few months back, I think by January or February we gave, I don't remember it. Then now the current price is 1600. Similarly, we gave a company called Kirloskar Pneumatic, 1150 gave. It came to 1650% appreciation within few months. All these companies have shown good earnings growth. So if you able to pick companies which is having good earnings growth, there are enough number of companies are there where you can pick it. The earnings growth are good, valuations also reasonable. You can easily make. Just when sentiment change means, then the price will go up very sharply. See, for example, one company called Balaji means. Previously, we have recommended that stock many times. When the price was 500, it went to 5,000 within the matter of 1.5 years. It went up 10x. It went up in 20 during COVID time, 21, 22 time. We made good money in that. See, the price keep on falling. It fell to 950. Now it is trading at 2,100. 950. You see, just 2 months, 2-3 months back, it was 950. So within a couple of months, price is going up by 100%. So if you able to find such companies means in short term you can make good money. GDP data still it is strong only. See, GDP now GDP as well as GVA both are released. GVA is nothing but it is a GDP data adjusted with a subsidy and taxes. That is called a GVA. and Q4 7.8% it has grown. So for the last 2 3 quarters, the growth has been good, 8.38, 7.8 growth it is. But for next year, no, it is expected to slow down little bit. For full year, it was 7.7 for FY26, whereas FY27 it is expected to fall to 6.7. This is a CAR rating projection. Well, two, three things are there. One, the inflation is going up because of high crude oil prices. Rupee has depreciated. Foreign institutions are selling. And monsoon, no, it is expected to be lower than normal. So, based on that assumption, RBI has reduced GDP growth. RBI has told 6.6. 6.7, it is told by Carriage, which is nothing but a rating agency. They are expecting 6.7. RBI is saying 6.6, they are saying. Maybe once, if monsoon revives, means they may revise it. Crude oil falls means they may revise it. As of now, they are expecting it will have some impact on growth. Not only in India, globally, every country has revised lower because of this US-Iran tension. Once the war stops, crude oil prices fall and things starts normal means, then then the revision will come. So this is the gold and silver price. Both has corrected. Silver from gold, if you see that, from $5,300 it has come to 4,188, 4,200 levels, almost 20% corrected from the peak. 20% correction is a normal. What is not normal is the silver price correction. It went to $118. From there it fell to $62 couple of days back, almost a 48% correction. Many times we have told it. See, silver, lot of speculative movement will be there. Price has gone up vertically, and the stories, the narratives which we have seen when the price was going up like this, no, uh, uh, whatever stories they told, that China has stopped silver exports, they told. The second thing is that silver is in huge demand because it is used in semiconductors, then solar panels. So there is a huge demand for silver. There is not enough silver available globally to supply to that. And then another third story was that a big US institution, they have went short, heavy short in silver around $70. They have to cover it in the next few months. Only sky is the limit because they have no other option but to cover billions and dollars of silver derivatives. They have went short. Everything it was told when the price was at the peak during this January month, and silver was going up vertically. And what happened after that when now the price has corrected? Not even a single news we are getting on silver. No one is telling why silver has fell. So what happened to this? See, actually, silver and gold both went up mainly. Gold, what they told was that it was a central bank buying. That is the main reason they told it. Central banks were buying heavily gold, and it is the international currency. No one will buy dollar now. Only everyone will buy gold. That was the story told in gold. Now, price falls means no one will discuss. We can't find anything in social media now. No one is telling why silver is falling now. What happened? What happened to the usage, industrial use in solar panels and semiconductors? What happened to the short covering by very big US institutions? What happened? What happened to China export ban? Nothing is shown now. See, what only happened was that huge money came into ETF. Now everybody is stuck at higher price. Many daily I'm getting 2 3 calls. You see, when price was going up, I used to get 4 5 calls that shall I sell all the shares and buy silver ETF? Shall I sell all the shares and buy gold ETF? That was the call I used to get. Now no one is calling. Now everybody is asking, shall I average it? Shall I average it? My price is silver base is 280 rupees, 270 rupees. Now price has fallen to 219. Shall I average it? I ask them, what is the percentage of silver in your portfolio? They say 60%, 70%. So when your portfolio is already over concentrated on silver, if you are going to average till now means what? It may go up means okay. Otherwise, if it doesn't goes up, means what will happen? You will lose the opportunity to invest in others also. Keep on averaging means what will happen? So the risk reward we have to see when buying. See, many times I told because of social media, it is easy to manipulate the stocks very easily now. because by putting some news on Twitter or Facebook, no, at the same time billions of people are getting it. Even 1% act because on seeing this news means huge buying will come. Many stocks, even now, no, many defense stocks and many foreign stocks, no, are manipulated using this social media. 3 years back, this the same thing happened in cryptocurrencies, Bitcoin, and many things. Bitcoin now down by 50%. Now no one is talking about cryptocurrencies. The market leader Bitcoin is down by 50%. Many other cryptocurrencies are down by 80%, 90%. People are stuck into it. At that time in social media, everyone was talking about this cryptocurrency only. After when the cryptocurrency started falling, then they went into this gold and silver. Now that also the chapter is over. Now we don't know globally. Now the semiconductor stocks and other stocks they are saying. In US, so many mining stocks, silver mining stocks went up a lot. Everything fell by 50, 60, 70% after the silver price fell. So in social media, whatever comes, we have to be very careful. We have to do our own due diligence. Otherwise, if you get at the top means, then we may get trapped. We will lose other opportunity also to invest because price is already portfolio will be overloaded with the non-moving stock. And positive news, auto sales are still good only. The month of uh, May 26. So after the Iran war started only, March only the war started. But after that only the auto sales are still positive only. Passenger vehicle, this is the domestic sale, 23% up. Two wheeler 7, three wheeler 3%. Commercial vehicle 5%, tractor 11. So overall 10% growth is there. But it's the highest level sale retail sales in auto in the month of May. So what is positive on auto companies is that exports are doing very well. Some 2-3 companies in two wheelers and in cars, Maruti exports are doing exceedingly well. Their volume has doubled. Previously, they used to sell only 20,000 cars in export market. Now, for the last 2-3 months, they are exporting 40,000, more than double they used to do it. So that export is doing very well in automobiles. Two wheeler, Bajaj Auto, TVS, all are doing very well. Bajaj Auto said that another they are having order book full for the next 2 months also in exports market. So exports in automobiles is doing very well. So that is why many auto ancillaries and all doing well. Once the crude oil price falls below $80 means, then naturally auto sector, bank sector will start doing well. PSU divestment start on a brisk note. See, government will react only when they push to wall. Historically, that is the nature we had in our country. Now, what happened? Fiscal deficit is expected to go up because of high oil deficit, LPG subsidy, and oil subsidy. Now, government has no other chance. Generally, they used to do divestment only on the February, March only they used to do. Now, what happened? Now, there is shortage of money. Government started doing a divestment from April onwards. Coal India came, then NLC came. Divestment, see 12,000 crores they have did it in the last 3 years. If you see, in spite of good markets, no, they used to do for full year 16,000 crore, 10,000 crore, 16,000 crore they did it for the full year. Whereas in the till April to May 2 months, they have did it 12,000 crores they have did it just in the last 2 months. For full year, they did 16,000 crores and 10,000 crores, whereas in the last first 2 months they did 12,000 crores. They have did a divestment. It looks like that government is in need of money. That is why they are doing in a hurry. They are doing it because of high oil subsidy and fertilizer subsidy expected current year. No, a huge money may be needed by the government. Monsoon update started on a weak note. And the further negative is that the IMD, no, they have cut the monsoon season rainfall from 92 to 90%. So it is expected that rainfall will be lower in current year, and a delay in arrival is one of the main reason. Monsoon arrived only on 4th only, and strong El Nino is expected, and many are saying El Nino already started. That also will reduce monsoon. That is why many pesticide companies and all not doing well. And only positive is that the IOD Indian Ocean Dipole is likely to turn positive from July onwards. That is expected. If that happens, means at least South India may good rainfall. So in spite of El Nino, strong El Nino, because of positive IOD, South Indian states will get decent rainfall. So if IOD, if it comes, means then it may neutralize some negative in coming months. FII continuously selling almost 8 lakh crore they have sold from October. If you see that July, April, May, June, they have sold heavily. June, just 10 days past, 43,000 they have sold. Mutual fund flows has reduced little bit because market was not doing well, and almost 2 years passed, even mutual fund investors are getting fatigue. So that is why the flows were lower. SIP flows is there, 31,000 crores. So what we have to do now is that we have to see the broader market opportunities. Action, many stocks are doing very well. We can get even 5-10 stocks, that is enough to run for 1 year. If we get good stocks, for 5 stocks, if we get, then that is enough for making decent returns in 1 year. And there are enough number of stocks doing well. Only thing is the conviction needed to hold the stock. See, I have seen that many stocks used to fall by 50%, 60% from the peak. From there, it used to go up. So only thing is that we should know about the company. Then only, because while stocks falling, we may get panic and we will exit it. Most of the good doing stocks, no, they are initially correcting a lot, and then from there only it is going up by 2 times, 3 times. That is the phenomenon. Market is happening in the market for the last 2-3 years. Stocks which are doing very well now, if you see the long term chart, just 2-3 years back, either they will be consolidating for 1 year and then they are going up very sharply, or either they are falling for 40%, 50% from the peak, and then from the lower level they are going up 4 times, 5 times. So we need conviction to hold it, otherwise we may sell it in panic. And export oriented companies also we are expecting to do well, and the buyback announcements will continue. Lot of buybacks are coming, and because of the tax changes, more buyback to come. And even foreign institution activity, we have to watch it. Then the geopolitical tension, this US Iran war, we have to see. Okay, that's it. Now we can have an option class.